Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, August 13th, 2024. It's 10:40 a.m. Eastern Time. As I'm doing the video, figured I'd get a quick one out to you. Really just a follow-up on the post I just gave you. We are coming up to those downtrend lines, which have been and still are my, kind of what I call ideal, like max bounce target zones. Give you a pretty tight zone, from, after going long that morning. A week ago, yesterday, Monday, the lows gave you a target range. Well, initially up to here, T2 revised, pulled it right there, said, my plan starts scaling in this area here from that level. And I'm talking about scaling back into closing long, scaling back into shorts, just to be clear, if you haven't, if you're just catching up. And then up to that downtrend line. And again, it's a relatively tight range. It's only 2.4%. We're almost there now. We're getting very close, and close enough for me. That's it. Why, at this point, you really want to zoom in and grab today's highs on the top of this little candle right here and go up. You're talking, 0.5%. Obviously, it's to me, it's a very obvious trend line, and I imagine to others. So, if we get there, all the better. And then, there's some levels. It's not the absolute be all end all, but at this point, I don't plan to add any more. I'll just kind of sit tight, watch, and then determine where to start scaling out or hard stop out of those positions if we go up much further. Again, we could certainly go up quite a bit higher. Let me see if I have a fib board here. If we want to retrace, this is the high right here. There's a typical 61.8 retracement up here. A lot of price resistance. That's around the 475-ish level. Again, there's the fib level right there from the move down from the high to the recent lows. That's just one example. So we could push higher and still have a typical run-of-the-mill counter-trend rally. Or, we'd start taking out that 61.8 fib. I always say it's typically the all the way from the 38.2%, which is right here. I'm sorry, 38.2 fib to about which is about where we are right now, up to the 61.8. There's your 50% right there. That's your typical retracement area in a counter trend bounce, meaning first wave down, counter trend rally should stop anywhere from the 38.2 fib where we're at now, 50 or 61.8. They're not hard levels, guys. It's just kind of a general guide. Anything much more than that tells you, hey, maybe something else is going on. So, anywho, put a pretty good weighting on these trend lines. Even just for a if you're just an active trader, like sometimes I'll give you my plan, but then boom, I'm changing and I'm closing out and I'm reversing. But there's probably an active trade to be made. I'll get to that in a second. In the next day or two, based on the heavy economic calendar coming up this week. So today was just a soft PPI, but you got CPI tomorrow, jobs numbers on Thursday. Here, why don't we get there, and then I'll get back to the charts. Here's the economic calendar. You can, of course, access this on the site under Tools of the Trade. You go up to the top of the site right here under Resources, and then you go to right here, Tools of the Trade down there, and then Economic Calendar. And you can see everything on there. There's, this was today, PPI, tomorrow, CPI right there, Consumer Price Index, jobless claims, retail sales, Philly Fed Manufacturing Index, Empire State Manufacturing Index. So got a lot of stuff on the calendar this week. And again, remember, we were, long before, in pre-market before there, gamed the bulk of this, so far it's now about a 9% bounce. Again, I don't know exactly because the pre-market trades aren't shown here. And how much profit taken are we going to see? Remember, there was still a big shot across the bow. Is it one and done? Who knows? Maybe. Somebody asked that question. I'm going to get to in a second. I made a reply. Somebody asked about the VIX, and I'm going to get to the VIX in just 1 second here and talk about why, as high as we went on the VIX, why it might not be the end of the correction. Okay, so let's not beat a dead horse. That's it. That's simple stuff, right? It's a downtrend line, and I gave you the same one on NQ. We're almost there. I wanted to get it out to you in advance. You can see we're just spitting distance from it. and that's a likely reversal point. You also have on the futures here, you have a potential divergent high. Again, potential. We're still heading up. We need to see the PPO cross down before it takes out the previous high. Same with the RSI, and that would give us a bearish rising wedge. And that would coincide. We get a rejection off the trend line, a breakdown of the wedge. You got a lot of economic events coming up. And we'll just see if there's more people wanting to get in or out of the market at this point. So the market's going to give us some clues in the next couple of days here. All I can do is point out, the technical levels, tell you where it's, what's objective, and let you guys decide how to trade it. So there's the markets. Let's not overthink it. Somebody asked me today. Well, they asked yesterday. I just saw today about NVDA and SMCI this is a 60-minute chart. So the chart I gave was a daily, and I just screenshot it right before this video and said, look, they asked if it's objective to short, and that was, again, they asked, I just saw that today. Yeah, if we're at the trend line right now, it's a daily chart. So if we close the day red, in other words, I could see that slight incremental bit of upside on the indexes, especially on the NASDAQ 100. We hit the trend lines, we reverse, and NVIDIA will reverse with it, and that would then give us a reaction. All the better if you see an impulsive reaction. Now, NVIDIA can very well carry over. It's still, NVIDIA peaked back in June, way back there, and it's clear, unmistakable, unarguable. You can't argue that's a downtrend. A downtrend is simply a series of lower lows and lower highs, and that's exactly what I'm drawing here for you. When does it start to call into question any counter trend bounce, the downtrend? Well, when you take out that previous high right there. Now, I happen to have and have had with Swarmer support, its resistance. So as I said in that reply with this chart I put up, this, if it takes out the trend line, that's really nice resistance there, about 118, we'll call it, and then again at 125, and it could certainly, if NVIDIA wants to do that, no problem. It would be a 61.8 retracement to get up to almost to 61.8 fib, which I just put up as a little shy of that 125-ish resistance. So you know me, this is where I was covering that day, as I mentioned, because NVIDIA hit the trend line. That was so did QQQ, hit my targets, and that was short into that, long, and now it's time to start scaling back into an NVIDIA with initial entry here for a swing position. I've traded it a couple times, long, short, but I think now from here up to ideally, but not, I don't plan to add above 118. And its partner in crime, SMCI, will most likely go along with it. I'll update that in a second. But remember, the most powerful sell signal, long-term stuff, comes when NVIDIA clearly takes out this primary uptrend line. That's just such a biggie right there off the October lows. And so that's NVIDIA. Remember, I gave you price targets on a weekly chart, and this was it. So, calling that one off the highs too. T1 was hit here. It's the same thing. You have the intersecting primary uptrend line and the price support. That was good for when I first laid it out, the targets, wherever I said, that if it hit, that would be a 30% drop. We had this wedge break. There were just so many reasons to be short NVIDIA. And still at this point now, so many reasons to cover. It was the 200-day it hit as well, the 200-day moving average. So there were 101 reasons to cover a week ago today, and now it's time to start either scaling back in. You could hard short it here if you want. If you're bullish, just keep, raise your stops, but it doesn't make sense to short a rally into resistance. You want to see the downtrend lines taken out. All right, so, what else do I have? One thing to note on NVIDIA too, and I circled in that chart that I posted in the reply to in the comment section from yesterday's post. I've had this line here forever and a day. This is the PPO price percent oscillator indicator down here, and you can see since 2022 I've had a purple line right there, a little bit below the zero line. Why do I have that line there? I've talked about it in the past. It delineates bull and bear trends. Sometimes the zero line, that dash line, which you get as default on your PPO, will do it. But I look at every security separately. I analyze it how it behaves, and then some things I'll have the line a little bit above, a little bit below. And what I'm looking at, guys, is the 9 EMA, which is the white line, the last of the two to cross when you're using a PPO. If you don't have a PPO, MACD is a very close cousin, and you'll see a similar thing. So anyway, when you're down below it, those are your correction. That was COVID. It doesn't look like much on this. This is log scaling, so it looks like a little blip here. No, it wasn't a blip. It was a 40% drop, and the bulk of that, it was the first time in years we crossed down below there. And so this line, again, it delineates bull and bear trends, or helps to. Nothing's hard set in stone, but it does a pretty damn good job. And again, look at the white line, the 9 EMA, because that's the last of the two to cross. So when you're above, you're in a bull trend, and when you drop down to it, it acts as support. You often bounce off it. Then once you break it, like you did finally right here, you're down. It told you, hey, bull trend has ended. We're in a bear trend, and then you want to short rallies back to it. And that told you this whole time, hey, you were in a bear trend. You had a little whipsaw where it took it back there. Again, this isn't the be-all, end-all. I don't trade solely off this. I use it in conjunction with other things. But then, so other than that brief whipsaw right here, you were back down below it again, rejected. And so pretty much this entire time, other than that one whipsaw, it told you the trend is bearish, be short NVIDIA. Had a nice rally there. And again, you can take these rallies. You could actually probably just trade this alone. Well, I can tell you definitively looking at this chart, had you only been trading this and gone long when you're above that line, the PPO is, the 9 EMA, and short when you're below it, you would have vastly outperformed NVIDIA. You would have sidestepped the bulk of the corrections and bear markets, and you would have been long throughout almost all of the rallies, right? And there's an example. Took it back tested successfully, back tested, said stay long and strong, long and strong, back to up. But now we're below it. So just wanted to point that out. The RSI typically, but not as accurately, when you're below the 50 level, which is the midpoint, RSI is a bounded indicator, meaning bounded by 0 and 100. There's no limit on the PPO. Theoretically, you can go to whatever number, but you have a band. So that's why 50 is in the middle there. And it tends to also kind of tell you you're in a bear trend, downtrend. So bottom line is we're below that right now. There is a potential bullish PPO crossover, and sometimes those are the catalysts for another leg up. I'm just showing you where we're at on NVIDIA. So that's it. So don't fall in love with it. If NVIDIA wants to go to new highs and beyond, you shouldn't be short for that. You can be short, in my opinion, up to, but not much below, not much above 125. Again, we'll see what happens. I just want to point out, like the markets, we have some downtrend line resistance depending on how we close the day. If there's an intraday reversal, we close, NVIDIA gives up some of today's gains, some or all. You're going to have a reaction on that trend line. And that's the other thing I want to add to, guys. It's really not a valid trend line yet, and that's just me. You've probably heard me say this many times. In my opinion, a trend line needs to have 3 distinct reactions to help validate it, because any 2 points can be connected at random. So if we go on through there and we close green today solidly above it, you never really had a third reaction. We just moved right through it, right? So that's what I'm looking for. And based on QQQ, again, coming up to the downtrend line resistance, getting a lot closer now. There it is on the 60-minute chart. If you want to zoom in tight, there it is on the daily chart. There's your downtrend line. Different boards. This is the downtrend line right here. That's it, guys. Let's not overthink it. Downtrend line resistance. Next up, let's talk a little bit about the VIX. All right, so we were long the VIX off the lows recently via VIXY or futures if you're a futures trader, and then closed it out, booked profits. And I mentioned recently, this is the actual VIX, the spot VIX here. And I mentioned it would be an objective re-entry on a pullback to the uptrend line, which is exactly what we hit today. We hit it yesterday too. You can see I know this is a busy board here. Let me make it clean for you. It's the uptrend line right there off the lows. And so it's just TA 101. So at the same very time you have the NASDAQ 100, to me the most important index of all, running into downtrend line resistance, you have the VIX pulling back to uptrend line resistance. And as I like to say, you miss 100% of the shots never taken. So this is just a shot. And it's a level, again, that I think is an objective level to add shorts, whether you want to just game a quick pullback off those levels as an active trader and then kind of get out of the way, book some profits. If you get that pullback before those economic reports come out tomorrow and Thursday, that's up to you. Or you want to, you're playing the long game and you're looking out for those longer term targets. All right, so somebody questioned 2 days ago about the VIX. Randy, you mentioned the VIX hit your level here the other day where I think it was something to the effect, I've shared this chart many times in the past, and this level here, this line about 50.37 is where this is where previous bear markets ended back in the late 90s, early aughts, and then this ever since in recent years, recent decades, I should say. Since that period, the last dot-com burst of the bubble back there, the dot-com bubble and that bear market. This is where bear markets ended. We had the 2007 to 2009 financial crisis. That's where it ended, and we had COVID, and that's where that ended. And then between there, if you look at all the corrections, the 10% drops. I believe all of them. If not, it's most of them. This is where those ended. This is where the VIX spiked to and the correction was over. So to answer that question, if we're still in an ongoing bull market and I'm just dead wrong and we're going to well beyond the highs, we got another, we're going to take out the recent highs in the market, S&P, NASDAQ, they're going to go up another 10, 20%, continue on for a year or so. This was probably we'll look in hindsight, it'll prove to be again one of the best buying ops in a long time. However, I am going off the overriding theory as I have, and I haven't waffled on that the highs back in 2021, 2022, and this is the reply to that answer. That was the start of a new bear market. You can see here back in 2022, October of 2022, when the market bottomed, we never even got up to where simple corrections had ended before. There was no fear. This is the most fear that we've had since COVID. It was the biggest drop. It set a lot of records. We just had a crash in the Nikkei that goes back to the frickin' 80s or something. So no, this to me seemed like the start of something much bigger. And I wouldn't be surprised to see these levels taken out before all said and done, or at least matched. So again, it looks to me, the spike looks like the initial spike up, and there it is. We're back testing right now. You can see where we're at. This is the primary downtrend line I've had on this chart here for a while on the weekly, and I just showed it to you on the daily. Remember, we're coming off this big divergent low. So the $1 million question, is it one and done? Only time will tell. I gave you my thoughts as to why I don't think it is. I think we'll get another thing up here soon. But again, there are no guarantees. And so, we use that spike to cover shorts and to get long. It's certainly, the reasons to do that recently. But the $1 million question is, will there be more? Let me show you one more reason why I think there will be more. Okay, an indicator I've shared with you many times in the past, one of my favorites. Let me see if I can get a different board on it. Hold on one second. Oh, okay. I guess this one's fine here. I haven't updated in a while. This was a band, this green band right here. I've had this forever and a day. That is my range where it's in extreme in this. And again, there's different put to call ratios. There's a CPC, which is the total put to call ratio. And then the CPCI, which is the index only put to call ratio on indexes, and then the CPCE, which we're looking at here, one of my favorites, the equity only put to call ratio. So it shows the ratio of folks that are buying puts compared to those that are buying calls, right? And so if this spikes up, what does it mean? It means everyone's buying, a lot more people are buying puts because they're worried about the market dropping. And that's both institutions as well as retail traders, and institutions hedging up, traders betting on a fall. And again, this is where I like to historically markets at bottom. You see spikes into that level. You got one right there. Let me see if I make that line. Yeah, that marked the bottom right there. You had another surge up to the high end of the range right there, and this was one of the best times to get long in our lifetimes right here, and that fired at that point. You got into the range several times. Back here, you can see this was the big Q4 2018 drop. We shorted that market drop with impunity from the lows to the highs covered there, based on a Fed pivot, which I predicted we got. Market threw a tissy fit. because the Fed had started a hiking campaign and then had to walk it back and give back the juice to the market when the baby cried after the big Q4 drop. And look, it spiked right there. That was another reason. COVID, you see, we got it there. So, okay, where am I going with this? We even got it back in the October lows right there, right? So, but look what happened recently. Nothing. There's no fear in this market, guys. And based, again, on the magnitude of the drop that we had recently and coupled with the technical evidence, I think this indicates we're going to see another, some more downside in the coming weeks to months here. I don't know. As I said yesterday, we could certainly slog around sideways for a couple weeks, couple months. That's possible, or not. Again, if assuming the downside scenario is going to go, but once we start taking out the recent lows, look at QQQ, look at NVDA, go back to the primary trend line on NVDA. If and when that goes, go back to my weekly chart, the primary uptrend line, the recent lows, things like that. QQQ also gave you the QQQ on the weekly chart. So the recent lows, remember, we just had a successful test of the 200-day moving averages, and we're above the 200-day moving averages on both QQQ and SPY. So the next time we go back down and go down through them, that's when the market's probably going to say, well, that was it. And that's, my plan was and still is and has been to game a reflexive bounce. Like I said, they were very likely to step in and buy the first pullback to the 200s. And while from here, I was calling us down to the 200s, saying for quite a while, and back here, that we're going to come visit the 200 soon. We always do in a bull trend. That's the time, short down to it, cover. And then again, the $1 million question is how far do we bounce? And, look at the weekly chart. There's not much. This is, so far, T2 was hit. T1's right there. The next resistance and only resistance I have on the weekly, other than this next uptrend line, is all the way up here, 473. So we could easily drift higher, and it wouldn't invalidate, or really change anything what's happened here on the charts. Yeah, but we start going much above that, and that would be just if you're going long or short. You're long, you're trying to milk that out, or you're shorting. That'd be about another 3%. I could easily see that happen. And it wouldn't really change a whole lot in the technicals. I'm going to put up, I already showed you fibs. It'd probably get you to the 61.8 retracement. And on SPY too, I believe it was in that pre-market on last Monday before this past yesterday, that we reversed. And the SPY was right at, I believe, on the 200-day exponential where it reversed. And you can see this is the chart I laid out. I gave it to you initial on a weekly chart right before the peak here. Gave you these targets, and you can see us, reversing hard off the 200 right here on the weekly. But you can also see right here when I step down to the daily, you can see it pretty good. A level I've had here, 537.66 ish. You had a gap in there, broke, back tested, had several reactions, and you also have the 50-day moving average, which isn't as good as the 200. You tend to go through the 50 a little more, but it does define trends. You'll pierce it briefly, but often when you take it down in a bear trend, then it acts as resistance from below. You can see we back test. It's a yellow line, by the way, guys, and we recovered it there. There haven't been a lot, there's not a lot of downtrends to analyze, except, we can go back here, of course. And you can see the 50 was taken out right here. I hope you can see it. If not, I'll make it big and fat if I can do that. Line style, line width. Let's make it nice and fat. We'll do that for you. Okay, there it is. So we're riding the 50 up, and a little, brief stint down below it. Took it back tested. So you can see you go through it a bit, but generally once you take it out, or clearly take it out like we did there, we rallied back, got rejected. Again, there was a lot of volatility then. As I just said, it doesn't do as well a job as the 200s, but it does a decent job of defining the trend. And so is this one of these? Maybe. But if it's not, I can tell you we're rallying back to a level which quite often when you're below it does produce reactions. So that's it, guys. I'm just telling you the same thing over and over. We've rallied back to ideal, short levels to, either take a new short, add to shorts, book profits on longs if you happen to hold out a little more than I did off the last Monday's lows for those swing positions, trend positions. And goes the other way. If you're bullish, you want to see all those resistance levels I just covered in this video taken out. And when you break above resistance, then that's a objective time to go long, a breakout above resistance. What is not is rallying back in, up into resistance. The only objective trade at that point in a downtrend is to either sell longs or go short. All right, guys, I'm going to wrap it up here. This has been Randy Finney with Right Side. Oh, wait, you know what? Just a quick update on crude. We did hit that. Yeah, on crude, we did hit the trend line. Remember yesterday I showed you T2 zone up to the trend line. I said if they carry it up to the trend line, that would be an objective level to add to a short position, taking a T2. And I said, look, quick thing. So we pulled back. I added up there more. That's much better resistance. Now, I want to point this out because, like I said, we could bounce back up, make a marginal new divergent high, but if we do it, we're going to take out the downtrend line. So I'm kind of leaning open to this trend line getting taken out now, just because that was my plan. I told you in the video I'd take a quick profit, scaled in, averaged in, increased, several lots bigger at the better resistance there. So profitable, small profit. But I wanted to update that because if it does drop down below here, then it could go quite a bit lower, and there's not a whole lot of support down below this level here. So I just wanted to point out that objective short entry add-on there and the rejection on a couple attempts at the primary downtrend line. Now it goes the other way too. If we break out above the trend line, now remember you probably have divergence, but either way that's could open the door for a bigger run up in crude. And again, there's a lot of geopolitical risks right now priced into it with everything going on overseas. So today it's off. Everything's probably calm and hunky-dory right now at the moment, but just wanted to update that trade for you. All right, guys, I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.